Hello, and welcome to Homeowner AF, the Canadian first-time homebuying podcast. I'm Brianna Goslin, mortgage agent level 2, and I work with Canadian first-time homebuyers every single day. If you want to own real estate in Canada but aren't sure how to position yourself to get there, this is the podcast for you. I want to see more young Canadians in the market, building equity and long-term wealth. That starts with getting the right advice at the right time, so you're positioned to act when it matters. Each week, I'll bring you bite-sized episodes that actually move the needle toward homeownership. Short, strategic, and packed with practical tips that you can use right away. I'll cover topics like minimum down payment, closing costs, credit, consignors, and more. Remember, your finances are like a thumbprint. No two are the same. For advice tailored specifically to you, book your free call at briecallme.com. Now, let's get into it. Hello and welcome to Homeowner AF. Today, we're talking about renewals. Now, a mortgage renewal is something that happens at the end of your mortgage term. So when you sign on for your first mortgage, you're going to choose typically a 3 or a 5-year term. It could be as short as 1 year. It could be as long as 10 years in Canada. It actually could be as short as 6 months, but we don't see that very often. Now, what happens at mortgage renewal is that your lender will reach out with a mortgage renewal offer, and that will have a rate attached to it, as well as a couple of terms. And what most Canadians do is they just sign on the dotted line and they sign on for another 3 or 5 years, whatever they've chosen with that lender. Now, I want to challenge this proclivity that Canadians have with just signing on the dotted line, because mortgage renewal is actually the perfect time and the cheapest time to assess what's working, what's not, what your debt load is, how cash flow feels in your household, what's your budget, and if there are any consignors or guarantors that you now want to remove from that mortgage. So yes, all of this can be done at mortgage renewal, and the best time to have any of these things done is at mortgage renewal. So here are your options, and I'm going to tell you a little bit about what each of them will look like, what the process is, and what the cost is going to be to you to make changes to your mortgage at renewal time. So first things first, you're going to want to get a hold of your trusted mortgage agent or broker outside of 120 days. So 4 months away, you want to get a hold of your mortgage agent or broker, because at this time, we can save whatever great, hot, low rate is on the market for you, and we can lock it in until your renewal. And you'll understand why that's important a little bit later in this episode. So you're presented with mortgage renewal. You know it's coming up. It's in your calendar. If you're one of my clients, I've already called you to book an appointment so we can discuss what's going to happen. And you can do one of two things. So first things first, you can sign your lender's renewal offer. If it's a smoking offer, it's a great rate, you're happy with your mortgage, you're happy with your lender, nothing's changed, and your mortgage agent says, yeah, actually, that's a great rate for you. This is really what I want to happen for all my clients if they don't need to make changes, because it's the cheapest, and it tells me that I've put you with a good lender who's a great match for you. I love that for you. We love less paperwork for you. We love less cost for you. So if your mortgage product is still aligned, and your mortgage agent or broker has given you the go-ahead and said, yeah, that's actually a great rate for you, go ahead, sign it. Next option that you have is you can move your entire mortgage to a new lender for a more advantageous rate or product. So if you don't need any more money from your equity, you don't need to tap into that equity that you've built over the last couple of years, cash flow's great, you love the mortgage product, or you maybe want to make some prepayments, that's great. You can do that at this time too without a fee. But if you find a better rate elsewhere, if your mortgage agent says, hey, look, lender XYZ is going to give you 25 basis points off what you're paying right now, then that could make sense to move your mortgage. And to do this, you will have to requalify. So we'll make sure that all employment details are still the same, or you're earning more money and you can qualify for that mortgage again, and we can move it at no cost to you to a new lender. The third option, it is a refinance technically. So if you have any debt that you're looking to consolidate, so credit cards, personal loans, unsecured lines of credit, things like that that are eating into your monthly cash flow, which I'm recording this in May 2026. A lot of my clients are dealing with that right now because of inflation and insecurity in the job market and a whole host of things. So if you are carrying a lot of that debt, then we can roll that into your mortgage at renewal time at the lowest cost to you. Also, if you want to lower those mortgage payments, we can actually lengthen your loan and give you some relief on that payment. So lower that monthly payment a little bit for you by way of refinance as well. The other thing that's going to fall in this refinance bucket is removing a cosigner or a guarantor. This is very popular for folks to do at their first renewal, first-time homebuyers to do at their first renewal if they want mom or dad or grandma, grandpa, whoever's co-signed with them, if they want them off that mortgage loan, whether they want to co-sign for somebody else or they just don't want to be liable for that mortgage anymore. And we know that the applicants will qualify on their own. That's great. We can refinance and we can get them off your title, off the mortgage loan. Say, thank you very much for your help, but we don't need you anymore. And that can happen at renewal. Now, the reason I'm saying all of these things should happen at renewal is because it's going to be much cheaper to do so instead of midterm. If you've listened to the podcast for quite a while, you know that if you are in a fixed rate mortgage, you are going to get dinged either that 3-month interest rate, that 3 months interest penalty, or the interest rate differential penalty, which is usually quite a bit higher than that 3-month interest penalty. You will have to pay that to pay out the mortgage, to refinance the mortgage, or to move the mortgage to a new lender when we're at renewal. And if we line up the dates properly, then you don't have to pay, and that's more money in your pocket. So more savings for you over the life of that loan, which is ultimately our goal, right? But regardless of how you want to proceed at renewal, you should be meeting with your broker, like I said, 4 months out at least, to talk about how that mortgage is aligning with your life and your goals. For example, if you are in a fixed rate product and you're thinking, you know what, there might be some savings for me to go into a variable rate product, renewal is the time to do that. Of course, after chatting with a professional about how that applies to you. You can shorten, you can lengthen your loan length, you can look for different products that are going to help you pay down the mortgage faster. That's also something that a lot of my clients are wanting to do at that first renewal because they're thinking, you know what, we're doing really well holding this mortgage and we're saving some money, and it would be nice to be able to pay more onto that mortgage principal. Well, there are some products that can really cut down the time in which you are paying down that mortgage. And maybe I'll do another episode about those for those of you who are keen to pay down that mortgage faster, and let me know if that's something you want to hear about. But for today, yes, what I want you to keep in mind is before that first renewal, get a hold of your broker, talk through your options, and don't just sign on the dotted line because it's easy. It may be easier, but you could keep a lot more money in your pocket by doing a little bit of homework. And when you're working with a broker like me, you do a little bit of homework, I'll do a lot, and I'll present to you all the options so you can move forward in the best way possible for your family. Now, if you have a renewal coming up, please book a call at www.breecallme.com, and I will be happy to walk you through your options and to see what's going to align best with those big, juicy goals that you have for your household and how we can make the mortgage make that happen. Thanks for listening, and I will talk to you all next week. Thanks for listening to Homeowner AF, the Canadian first-time home buying podcast. You'll find links to everything I mentioned in today's episode in the show notes, along with details on how to connect with me. I welcome all of your first-time home buying questions. Send me a voice note to have your question featured on air. And if you're ready to talk through specifics for your first home purchase, you can book a free call at freecallme.com. Remember, if home ownership is your goal, you could be closer than you think. You just need the right information to make the right move. I'll be back next week with another tidbit to help you get there.